Dealmaker Zone. I'm your host, Steamson. Each episode, we interview leaders in real estate and technology. For this episode, we're going to focus on real estate and specifically note buying. In terms of the business itself, there are two ways in which someone can get access to distressed property. They can directly buy the property, or they can purchase the note that controls the property. Our host today is William Bonati from Infinity Asset Ventures, and he specializes in note buying. He's one of the leading experts in our region, and he's going to talk to us today about the process of buying notes, what the exit strategy might be, and how you too can become a note buyer. Before we get into our interview, I want to thank our gracious host, Prana Restaurant, located on 28th and Madison Avenue in New York City. William, welcome to the Dealmaker Zone.
All right, Steve, thanks for having me. Really excited to be here.
Thank you. So tell us a little bit about your background.
Yeah, absolutely. So in a nutshell, I went to college, knew I wanted to get a business degree, ended up with a finance degree in Colorado. And out of school, I went into banking and insurance and did that for about 7 years. So
was it in Colorado that you...
Yeah, I started in Colorado, then moved out to Miami. Was in Miami for about 5 years, and then moved up here to New York City. It's been just over a year now. I've been here in the city. So I was in banking and finance, at a bank, working as a financial advisor, and I did that for a financial advisory role for about 3 years, and I wasn't passionate about it. It wasn't something that I saw myself doing long term. And you know, I found myself struggling to get out of bed to go to work, and
I know the feeling.
It was like I think what plagues a lot of people is having the thank God it's Friday mentality instead of the I can't wait for Monday mentality.
Yeah, I can totally relate to that.
Right, so I knew that I needed to do something different. So fortunately, I had a supportive wife that said, you know, just do something different. Figure out whatever it is that you want to do. So I quit.
Awesome. That's the same thing with me.
Right?
That's good.
Yeah, I mean, just do. I think the Nike said it best. You know, just
do it.
Right.
Yeah.
So I quit. Spent about 7 to 8 months exploring a lot of different things. I looked at becoming a teacher. Looked at going to medical school, going to law school. All of these different avenues, and I had a colleague that was actually a little bit younger than me that was having a lot of success investing in real estate. He actually built out a rental portfolio in South Florida of about 15 properties within a year. I was like, wow, that's amazing. How did you do it? And so once I found out the opportunities in real estate, I found that to be really exciting. I immersed myself in that. And it's been downhill, there's some uphills, but I've been immersed in real estate ever since. So that's kind of
how you transition. Got it. Yep. So real estate itself, it's a huge industry in the different areas and segments. Now you focus on note buying, which is a unique approach, and a lot of people may not know about it, right?
Absolutely.
So talk to our audience, because a lot of people in our audience who are not quite familiar with the note buying process. So walk us through it.
Absolutely. So when I started looking at areas to focus in real estate, I believed it to be very important to focus on one niche and not get the shiny object syndrome of, well, I want to do rentals, and I also want to do rehabs, and then I want to do, you know, ABC. Like, there's so many different strategies that you can focus on. And so I spent a lot of time figuring out what it was that I wanted to focus on. And with notes in particular, I really identified with that because it truly creates an opportunity for all parties to win. And notes specifically, I really identified with having a background in finance and banking.
So walk us through what is a note. So is it so somebody has a mortgage on their house, they're late on their payments?
Right. So I get asked all the time, what do you do? And I say, well, I'm a note investor. So I got to stop changing. I started saying that I buy mortgage debt instead of notes, because everyone knows what a mortgage is.
Yes.
And everyone knows what debt is.
Yes.
Everyone has a credit card or an auto loan or something like that. So mortgage debt or a note is simply a mortgage that's collateralized by a piece of real estate.
And you guys come in when there's an issue with payments on that mortgage, right?
So we're specifically buying first lien, non-performing notes or mortgages. So we're buying these mortgages from banks, hedge funds, and note brokers.
So, for example, a bank gave me a loan on my property, 30-year fixed rate, etc. I'm late, like 3 months. I get a notice saying, hey, your property might go into foreclosure unless you make the payments. I don't make the payments. And then at what point does the bank sell you the note, and then what happens? So walk our audience through.
Right, so that's a great question, and this is kind of why I segued into notes. Is when I first was looking or researching what I wanted to focus on in real estate, I saw 3 market opportunities that were really prevalent. And number one was the major crisis or real estate crisis, 2008, that created an enormous amount of people that were behind on their mortgages or technically defaulted on their mortgage payments. Some time has gone by since then, so a lot of homeowners are now gainfully employed or they've recovered, but the banks, big banks specifically, are not willing to modify or really make a lot of changes to those mortgages or even forgive late payments. So what ends up happening is you've got someone who has not made a payment on their loan for sometimes 5 years, 6 years.
And they're still in the house.
And they're still in the house because the banks, it's bad press for them to foreclose. It costs them a lot of money. And honestly, big banks don't know their right hand from their left. So
because of the size of their inventory and the geographic location of their inventory, why do you think that is?
They just have so much defaulted paper or bad mortgages. A lot of it was government regulated and how much that they could sell. If they could sell it all quickly, I'm sure that they would, because we as a taxpayer have already bailed them out.
So the bank comes to you, say, hey, I have all these bad mortgages. You buy the mortgages, right? Do you buy the mortgages before they actually foreclose? Have they already foreclosed on the property when you're buying?
Some of them have already been, some foreclosures have already been started, and we'll buy the note.
So let's go to example. So scenario 1, it's been foreclosed on. You buy the note. What's the game plan with that, and how does this process work?
Well, we don't buy properties that have already been completely foreclosed.
So you buy
would technically be an REO at that point, where the bank owns or have taken title to the
So
property.
you buy before they foreclose,
We do.
right? So it's in the pre-foreclosure process, right? So you purchase that note, and then what happens afterwards?
So we purchase the note, and we really have, there's really 2 things that will happen. We'll either work with the borrower in helping them start paying again. Either that's a reinstatement, or we'll forgive some principal to help them out. Sometimes they're 5 years behind, so that could be tens of thousands of dollars. So we want to first and foremost help the homeowners stay in their homes. So that can be a reinstatement. We can do a modification. We are significantly more flexible than the big banks because we've bought their mortgage at a huge discount, so we have a lot of room to work with. So our mission at Infinity Asset Ventures is to help homeowners stay in their houses. That doesn't always work, so the second way, or the second main exit from a mortgage debt or a note, is by exiting through the property. And so that could be talking with the borrower and saying, geez, you're really in a situation that, we just can't help you. You can't, maybe you can't even afford to rent a house at this point. You're still not employed. So we will help them make a respectable exit from the property. So we'll do, that could be a deed in lieu, so they sign over the deed of the property to us, at which point we take possession of the property and then can sell it, we could rent it, we could rehab it, so many different exits from that point. If they don't want to work with us in doing a deed in lieu, we foreclose. And foreclosure is our worst case scenario. It's the longest time frame, or it takes the longest time, costs the most money, and doesn't help the community or the borrower. So those are really the 2 primary exits. Again, we exit through helping the borrower, or we exit through the property, whether that's a deed in lieu, taking possession of the property, or a foreclosure.
Got it. And what's usually the time frame from when you guys purchase a note till your exit?
Right, typical time frame is going to be varies upon state, and we focus on states with shorter time frames.
So which are your preferred states?
We like the Southeast. We like the Midwest. Florida is an appreciating marketplace. If you buy any assets within 50 miles of the coast, it's pretty hard to lose on deals like that. So, typical time frame for those assets in the Southeast and Midwest are 24 months or less. We're in and out. Best case scenario, we've had deals done in 4 months. Worst case scenario is going to be like an 18 to a 24 month time frame.
Now, you're based out of New York, and we've had this conversation before offline. You told me that New York is not your preferred market to purchase mortgages, and why is that?
Well, our money, we're utilizing a lot of capital partners, and they're not that patient. In New York State, the foreclosure time frame can be as long as 3 to 4 years. Now, there are some people that specialize in New York assets that are doing very well, and they've reduced that time frame to less than 3 years. But generally, you're in for 3 to 4 years, and we don't have money that patient.
Got it. So, speaking of capital and money, so what's your setup? You have investment partners. These are limited partners for specific notes that they're buying, or is it a fund that you raise? Can you walk us through your
Right,
process?
so currently we're doing specifically joint ventures, which are specific to one note or several notes or a pool of notes.
So do you would raise the fund and then get the pool, or you'd say, hey, we have this pool opportunity, are you interested in investing in it?
Right, we almost always have deals or assets or non-performing notes to pair with joint venture partners. So if someone comes to me and is interested or wants to know more about opportunities, and they've got $50,000 in their IRA doing nothing, that's an opportunity for us to move that into one or maybe two notes that you can pick up for about $50,000.
Got it. And then the distribution to your investors, is it upon exit they get their initial capital plus whatever return, or do they receive like monthly?
Well, I mean, every joint venture is different. We've structured them as a debt offering or an equity split.
Mm-hmm.
So in layman's terms, that's on a debt offering, that's us paying a simple rate of return to utilize your capital.
Mm-hmm.
And an equity offering, that's we partner 50-50, or depends on the joint venture agreement, but it could be an equity split. So meaning we split the profits, whether that's monthly payments that are coming in because we reinstated the loan.
So when you reinstate the loan, that's when you negotiate with the person living in the house. So but maybe you reduce their payments. Is that how you set it up? And they pay?
We can do a modification in a variety of ways. That could be an interest rate reduction. That could be forgiving or pushing out some of the late payments and arrears. Payments that they've missed for that 1 to 5 years that they've been delinquent. We can reduce interest rate. There's a lot of things that we can do to really help homeowners out.
Got it. So for somebody who wants to get started in the note business, what would be your advice?
Surround yourself with people that are doing what you want to do, and I think that applies to anything even beyond the note business. But I think education is really important because
we have some lovely music in the background.
Party time.
Yeah, it's the beauty of being in a restaurant.
Yeah,
what can I say?
Absolutely. Yeah. So
for somebody who wants to get in the note business.
For someone new, for me it was learn everything I could about it before taking action. I think that's really important in the note business.
Do you have a mentor, or is there somebody else you would
Absolutely. So I have one of my mentors always says, seek counsel, not opinions.
Seek counsel, not opinions.
Right. So everyone.
So you can make up your own mind, right? But you have to get some.
Well, I think it's when you're doing stuff that no one has heard of, and there's a lot of skepticism about. Your friends and family might not provide you with the best advice. They may provide you with opinions. So seek counsel, not opinion. So seek advice from those that are doing
what it is that you want to do.
Right. So there's a ton of information and free content everywhere. You know, I've utilized Bigger Pockets, YouTube. There's tons of videos on just about everything that you want on there. So get educated first, and then don't be afraid to take action.
Got it. So we're almost done with our interview. Is there anything you want to share with the audience? What's next for your company?
Right, so we got some really great things happening with Infinity Asset Ventures. We're coming into the fourth quarter, and we buy a lot of, or get a lot of our deals from banks and funds. And in the fourth quarter, they try to move a lot of those assets or bad paper, so to speak, off of their books. So it creates a tremendous opportunity for us to get deals later this year. So we have a lot of opportunities, a lot of deal opportunities coming up in the next 60 days.
So if somebody's looking to invest?
Right, yep. You can connect with me on Facebook, LinkedIn, send me an email, give me a call if you want to talk, learn about some of the deals that we're working on, or how you can partner with us. I'm definitely happy to share.
Thank you. So this is our episode this week of the Dealmaker Zone. We want to again thank our guest, William Bonati from Infinity Asset Ventures.
Thanks for having me, Steve.
It's like this, tired of all the nonsense. Like I dropped out of college, got me some common sense. I know you're scared of the God made rule. Forget the theater, coming to a block near you. Those that knew defeat, I'm a wreck-it. Flow grammar, rose the groove from concrete, check it, no amber. Peep to bring it back, I'm quick to beat up on the track. No need to teach me how to Dougie, but I can teach you how to rap.